Legends on since I saw you guys last like 20 minutes ago. It's insane. How have you been? What's been going on? I think the market maker is like, I can't let this girl give away any more trades. I'm like, I got to stop her. So sorry for that stream that cut out. What's going on? I hope you guys can hear me now. Okay, leave me a comment in the chat. Right before that last 18-second stream, which is a record, right before it finished, we had 49 likes to start with on this. So let's break that record before we even get started. Let me know if you can see me and hear me okay this time. Turns out what it is just to quickly explain it, I've got this problem in my house with the room that I stream in. The internet doesn't work very well here, so I have to run a cable, and every time I run a cable to the laptop it wants to revert back to Wi-Fi, so that's why it just shut itself off. But I think I fixed it for the moment, so we should be good from now on. You guys can see me okay, good. Hopefully you can also hear me okay. So sorry for that moment, but we're going to get into it. Luckily nothing really happened as far as price action in that time, so we're going to get into what is going on. I'm going to talk about this sideways zone that is happening and what I kind of think is going on, how I think the market maker is currently playing this game. So if you're new here, welcome. I don't normally mess it up this bad, although I did also mess it up yesterday. So maybe I do mess it up this bad, but at the end of the day, I can trade, you know? So you have to forgive me because I have talents and they are trading. So if you can forgive my lack of streaming talents, then you will be rewarded with my trading talents. So if you're new here, welcome. If you're returning, welcome back. Shout out to the TTC tribe for showing up today. I've seen you guys be very active in the Discord today, discussing price action and looking at candles that are like a millimeter wide long, but anyway, whatever. We'll talk about all of that. Be sure to smash that like button nice and early. Hit subscribe if you're not already subscribed, and turn that bell button to all so that you can be notified every time I do a new video. Now I want to talk about this formation that you actually cannot see because I don't have my charts on. There you go, number 2. But anyway, now you can see this formation that's going on, this sideways price action. And I actually did a Twitter update about this that I will explain to you guys. I'll bring it up here. So what I said in this update was we're in a trapping volume formation. We have declining open interest, flat price and flat volume, which usually leads to a stop hunt or a false move. Now, this was posted before this move right here. And so what you guys can see is that's what was happening. So look here, we just had basically price was stuck in a range. A trapping volume formation, if you don't know what it is, it usually comes after a level 3 rise or a level 3 drop. In this case, it would be after a drop. So we had our Monday false move week beginning to the upside, drop here, drop here, drop here. And then we kind of went in for, this is, I mean, you probably could call this a final damage W right here, but it doesn't even matter if it is or if it isn't because it's a trapping volume formation. That's what we've got going on. So what that means is that after the 3 levels are completed, you have this one last fast spike to the downside when your levels are drops. And this is basically what traps traders. So when price is falling, I noticed someone comment yesterday, I can't fathom why someone would buy the top. And that's a very fair comment when you have some trading experience. But when you don't, you have to go back to remember when you were a beginner, when price was moving up here, you didn't know it was the top. It's easy to say that's the top after price falls away. But whilst you're in your learning phase and you see price start to move fast like that, and again, this is the point of vector candles, the market maker moves the price fast so that you think, oh shit, I better just get in now. Like it might not retrace. What if it doesn't retrace? You know, I'm sure as a trader, you've had those thoughts at some point in your trading journey. So when you're still learning to develop that patience that is needed for trading, the market maker does things like this. It's all done to play on your emotions. So they move price fast, far away from a zone that it's been stuck in for quite some time, and then you just go, well, I just better just get in, otherwise it's just going to keep going. And that is how you end up buying tops and selling bottoms. So when we have a look at the reverse, then that's what's happened here. This green vector candle right here, that has trapped shorts who, at a big move like this, and then price just continued to trickle down, they thought we were going to break the level and continue down further. So they opened shorts on the break of anything. Could be the break of this support, or they just open shorts at the worst absolute possible moment. So when you have some trading under your belt and you understand what you're looking at, sure, you sit there and go, well, who would do that? But in the moment, you would do that when you're new. And you did that when you were new. So don't forget, right? Because everyone's journey is the same. So what's happened here is that we've trapped traders and we have not returned to that zone at this point in time. The key is going to be, because now what's happened is with this spike up here, which is what I was anticipating from that Twitter post, we've now done the exact same thing on the other side. Well, we haven't, the market maker has. So in this candle right here, they've also trapped traders above that current consolidation. Where's my trap traders? There, right? So now we have trap traders above and we have them below. And the question is, who are they going to release first? This is the hard part, because what they've done is they've trapped them both sides and they've brought it back into the range at this point in time. Someone in the Discord, I wish I could remember who it was because it was a very good question. Shout out to you. You'll know who you are when I say this. But somebody in the Discord said, why did they make this move so early? It's too early in the UK session, which is a very good point. And the reason that person said that is because with the UK session, we usually expect an extension at 8 a.m. New York time, because 8 a.m. New York is towards the end of the UK session, and that extension sets up for the US market maker to do whatever they're going to do in the US session. And it's also just UK market maker taking profit. So we always expect some sort of extension. And when you understand and learn this method in full, that extension leads you into a conclusion as to what's going to happen in the next session, and that's how you trade it. That's not for me to get into in this video, but the point being, why did we move early? The reason that we moved early, it's not always an exact science. It can move early. It generally does move on 8 a.m. New York or within the hour at least, but it can move early. But B, when we have a look at the open interest and the volume, that gives us a hint of why they made this move early. So in this entire accumulation range here, look at the volume. It is absolutely dead. I hope you guys can see that. Yeah, you can. The volume down here was absolutely dead. And the open interest, if I stretch that out so you guys can see it clearly, actually, let me just expand it. It doesn't look as much when you expand it, but the open interest here was declining. So when open interest is declining, if you don't understand how open interest works, it's a measure of both sides opening both sides opening trades at the same time. So for every one short, one long gets opened, right? And then if that is continuing to happen, regardless of price, so for every person who goes long, someone opens a short, that someone can be the market maker, by the way, or vice versa, someone opens a short, the other one goes long, the open interest rises because it's a measure of how many open positions there are. It's not to do with the direction. We use other indicators for that. So therefore, on the other end of that, when open interest is declining, one of two things has happened, and it depends on how it's declining. So if it's trickling down like it was here, that means that for every one short position that is being closed, one long position is being closed, or vice versa. For every one long position is being closed, one short. So equal sides are being closed at the same time, meaning less people are committing money to the market. Now, if you watch this channel, you will know market maker can't make their manipulative moves unless they've encouraged retail to commit their money to the market. They need us to have open positions before they can essentially liquidate us or stop us out. So when you see the open interest declining, that's a hint to you that people are closing trades the market maker is going to need to issue a false move to induce you to come back. Because how do they do that? We talked about that in the fast move at the start of this video. They do that by issuing a fast move that breaks a range, right? You can see that right here. We're in this range all day. They issue this fast move that breaks the range. That triggers breakout traders who may have buy stops in that zone, who are currently in some sort of a drawdown. They're not wrecked yet, but we'll see. And it causes FOMO because you're like, oh my God, it broke the range, better jump back in. So now they win. They got you to commit to a trade, and then they've closed back in and it doesn't go anywhere. So open interest was the hint here that they were going to have to issue that false move, which is what I said here. This usually leads to a stop hunt or a false move. So we've got that now, but what does that mean where we are? Nothing has happened since with the price action. Now we do have, I don't know if they are building these positions for an upcoming news event, right? So it kind of makes sense that they did. Maybe the reason that we moved that little bit earlier was to allow time to see how much of a commitment could they get off the one false move. Do they need to then reassess, come back to the board? Who have we trapped? Is that enough before consumer confidence for us to make another move? So consumer confidence is coming out at 6 p.m. Dubai time, which is about just under 3 hours from right now. And, you know, that might be the one. So there may be a false move that, not even a false move. There may be a volatile move that comes out of consumer confidence. And they may be setting up for that right now. So here's the thing. When we have a look at heat maps, sometimes they can give us an idea of, you know, what they want to do. Yesterday, we talked about these orders down here that were between, there was 28,600 and 28,500. We've also had 28,550 open up. So between those three, we've got 3.8K just in those three worth of long orders. That's a lot, actually. That is a lot for price in a zone. And above price, we don't really have a lot pushing price down. We did have previously a really big order here at 29,850. And when I show you where that is on the chart, you're kind of just like, what? It just doesn't really make sense. Because look, you have to zoom out. 29,850 is all the way back up here. That's where they want to short from. Like, it's going to take a lot to get price back up there at this point in time. A lot of buyers would have to FOMO in. But anyway, that's gone now, so it's irrelevant. But these sell orders are still here. So the point being, what is the point, Anastasia? What is the point? Like, if anybody knows the point is you should smash the like button while I think about what the point is. Smash that like button and let me know that you're enjoying this stream. The point is this: if price returns to these trap traders now, then they are happy to release them, which means they want to keep these ones trapped. So what would have to happen is, where's my tool? Here. Price would have to come up, break above that zone, then come back to retest these EMAs, which will start to curve up if that were to happen. Then we have continuation to the upside. That's not my preferred kind of setup that I actually want to see. To be honest, I want to see price come down into those buy orders. I want to see price come down to the 28.5 to 28.6 zone because it just makes sense. But when you're sideways, we have to prepare for both scenarios and then just trade whichever one gives us the trigger. So the trigger on a break to the upside is going to be a higher high that breaks this zone right here. And then we come back to retest EMAs and it holds there. Why do we have to wait for that? Because we've already had one attempted break and we've closed back down below the EMAs. So I wouldn't actually long this right now. I would wait for an actual breakout if it was going to go to the upside from there. Remembering news event can throw out the model and it can, can cause really some irrationality that we may not even really understand. The other thing too is pattern timing levels. When we think about the timing, we have to think about how much time there is left until consumer confidence. I always say at least an hour before a news event. If you don't want to close your trades because you think you're in a good position, at the very least, move your stop loss or, you know, move it to break even and take some profit if you can, just in case, because you never really know what's going to happen. So if you wipe out the last hour before the news event, then from where price is right now, we've really only got, what is it, just under 2 hours worth of trading time to get any kind of entry. And even if you got an entry on something, then it's going to be very tricky because the news event can take that out. So it's always better to trade post-news event than pre-news event. But sometimes the trigger comes pre-news event and you don't want to miss out. So at the end of the day, I mean, look at these candles. They're absolutely tiny, like ants are bigger than these candles. So it's not really worth trading in my opinion. But volume may come in if price does break above and hold above the EMAs. That would be the place to go long. I did say to the Discord, which is like a little bit of secret information. So, you know, if you want to learn this method in full, you really should consider come joining us. There is information about it in the Traders Toolkit linked in the description of this video. But I did say to my tribe who understand this method in full that if you were short from the false move week beginning and you're still holding on to that to see, because we're in accumulation phase, like we're just sideways, there's no real reason to exit your short just yet until it changes the structure. So if you're holding on to a short, you should have taken some profit, but if you're holding on to it right now because you're hoping that we get another leg down, this isn't a bad position to open a hedge position long, not now because it's moved, but previously off here and off here, off the initial low of the day, you could have opened a hedge long position just in case price breaks to the upside, because at the end of the day, your short is still open. So if price breaks down, whatever you lose on that long, you're going to make up on your short that is already open. But I wouldn't do a play like that if it wasn't a hedge trade. That's the only thing. So if you're not in a hedge trade, if you don't already have a short position and you're looking for a position, it would have to get above this trap trader zone and then start to create new structure before you go long. And all of that may not happen before consumer confidence. So it might be a post-consumer confidence thing that you're looking for. However, my preferred thing, this is like, you know, plan B if price does what I'm not expecting it to do. That's plan B. But plan A is I kind of am still expecting another stop hunt closer to the news event. May or may not happen, because the one thing we can't know as retail traders is how much damage was done in this. The market maker could have trapped as many people as they already want to, for all we know, right? I personally doubt it, because I would have expected them to pull away more by now if they were happy with who they've trapped here. They're keeping it in a zone pretty close to the trap. They haven't shifted away from it. So I'm a little bit skeptical that there may be another stop hunt coming. Let's look at the open interest. So here, when you have a look at the open interest on that spike, all it did, see here how it's a vertical, is it vertical? Yeah, vertical line down. That when open interest is vertical down as opposed to slanting down, which I talked about at the start of this video, vertical down is liquidations. So this spike up liquidated shorts because it went up, right? So that they're gone, right? Liquidation is the same as you closing your position. They're gone. If the market maker needs us to commit more, we're probably going to do that again. So it depends now. What you have to watch with the open interest leading into the news event to know whether or not that's going to happen is if it continues to rise. Excuse me, if we can get the open interest to rise like to this kind of a level, so it's at about the 112K kind of level. This is on the Bitcoin Binance chart, by the way. But if we can get it to rise to there, they may not need to do the damage because retail's committed and that's it. That's good. They can just send price wherever they want. But if you notice that open interest isn't really rising towards consumer confidence, then expect another false move, because that's how they're going to get the commitment before they send price wherever they actually want to send it. So the actual ideal play that I would actually like to see is that we pretty much continue to do nothing from now until closer to the news event, but the open interest rises. That would be ideal. Get out another false move to the upside you know, around the news event, and then come down into these long positions that we still have in the heat maps at the 28.5 to 28.6. That's what I personally would like to see. But of course, if price action gives me something else, then I will trade what I see. Let me just scroll through and see if there's any questions here. Yes, guys, smash the like button. How to get idea which coin will pump. I don't really deal with pumps and dumps, especially because I understand how the market maker works. It's just not worth committing your money to things like that. 𝗟𝗲𝗿 says, considering we had a possible trap to the upside, would you say that now going below 28.980 sorry, to close out longs and bouncing from there would be a good long to go to the previous week low? So 28.980. 28.980. Considering we have the well, if price only comes back here, so 28.980 is the low of the day ish. It's a bit lower than that. But if price only came back to there, it's going to release these traders. So the only question we should be asking ourselves right now, and what we should be watching for as traders of this method, is does the market maker release these people first or these people first? That's all we really need to know, because that's going to give us an idea of whether there is more. If they keep these people trapped and price moves out from here and releases these ones, then we're not coming down for these heat map orders. You know, they're a trap. Heat map orders can be a trap, just like price action can be a trap. They especially when heat map orders stay there for days. And these ones have been here. These are 4-hour candles. So 1, 2, 3, 4, 5 4-hour candles. We've had these orders here. So that's more than a day. That's not normal, guys. So this could absolutely be a trap. I wouldn't 100% bank on the fact that we're going down there. Price action is showing us that the trapped traders are here and the trapped traders are here. So it's only one question for us who trade this method. Who do they release first? And then you trade that direction. 28.980. Yeah, but see, 28.980 is up here. 28.980. Yeah, that's here. Like, I don't know why they would only return to here unless you're looking for a W out of there, which is possible as long as they don't come into this wick zone. If you're looking for, but it's a long time to hold for a W. I don't think it's a W. I think it's a trapping volume formation, which means, yeah, we're looking to release someone who's trapped. BTC is going back to 12K this year. Annie, when you see the red vectors form the inside right side leg of a W, red vectors form the inside, oh, right side, yes, sorry. Sorry. Is that a sign that, I read the question before I read who said it. Lucky. Yes, it's a sign that the Sydney Swans will make the top 8. All right. How would you know if it is the break and retest and therefore upside, or a stop hunt that breaks above the trapped traders and therefore more down? Good question, John. So a stop hunt is like this, right? It breaks up and immediately comes back down, or it can happen in the one candle. In this particular case, it's 2 candles. So price moved up, came back down, and then there's no follow through from there. And then it eventually just breaks the EMAs, which is like, it's kind of just hanging around the EMAs right now. But a break and retest, what will happen is price will break up. It'll come back over a few candles, like not just one immediate. Even if it does come back through one immediate, it will usually then do this and then still come back a second time anyway. But when it comes back to retest those EMAs, it will give you bullish candlestick formations, hammers, maybe railroad track off an EMA, star formation, you know, anything bullish engulfing, like anything that is bullish, it will give you. You can see here, we don't have anything that's bullish right now, right? So we're just failing the level. High block data, yeah, let's have a look at high block, because I actually wanted to show you the 7-day heat map, which I have to start again, 1 second. Because the 7-day heat map also has, or it had, if it's still there, it also has that zone right here. So this is 28.8, this yellow zone is 28.8, and this one down here is 28.7, and then, yeah, that's about it. So again, see how those numbers don't match up with the orders that we have in Trading Light. Usually it will be closer, and the Trading Light orders are $200 lower than this. So it essentially means that the market maker doesn't actually need to mark price down lower than 28,700 to do major damage. So I'm really skeptical that these heat map orders are there to trick us. I really am right now. I would love the price to go down there. I'll trade it if I see it. But look, see now the 28.5 says 1.7K. It's not normal. It's really not normal. So I wouldn't bank on us going down there, but I also don't see a reason to exit shorts unless we change that structure out of this zone and break above the initial high of the day. Like this stop hunt here failed the initial high of the day that was set in the dead gap zone too. So yeah, we got to get above that if we're going to have any upside and discount these heat map orders down here. Unless that happens, then we're looking at that. Actually, let me have a look on the 1 hour time frame to see where our vectors are and if these orders even make sense. Gosh, it was so long ago since we've been here. Oh, so we've got this massive area here of imbalance all the way down to 28.8. Oh, that might be the 28.890 you were talking about before. Yeah, 28.890, and this here. Yeah, so those liquidations that I was talking about would refill on those heat maps, would refill this whole area here, which would be fine. We would reset from there, and it might even take until FOMC for us to get down there, which again would be fine because it leads us to a higher chance of the midweek reversal being at FOMC. Those TL orders could be market maker making sure price doesn't go there. If they don't want price to go there, they just won't let it go there. But it would be more that they're wanting us to think that it's going there. Maybe so we hold on to shorts. Maybe so we don't take profit and we wait till that area, but it really only goes to the 28.7 or the 28.8. You know, it could be a number of reasons, but at the end of the day, you always look for your previous unrecovered vector and you take partial profits at those. What else is going on? Yes, there is an imbalance there. There would definitely be an imbalance there because we haven't returned there yet. All right, guys. Actually, let me just have a quick look at the other markets because Dixie, lucky I didn't forget this, is just about to break that 1 hour vector zone. So if it does, then it doesn't have another vector until up here at 101.73. Sounds like a radio station. But yeah, we are just about to break it as we speak. Besides that zone, we've got the 800 EMA on the 1 hour time frame, which is at 101.5. So yeah, this isn't good for if you're wanting Bitcoin to bounce here and move to the upside. This isn't that great for it to happen. If we actually make it all the way through this vector now, which I think we will, still 30 minutes to go of this candle to close. But if we make it all the way through it and it starts heading up towards this vector here, Bitcoin will come down more. So yeah, again, it's just another reason why I say if you're short, take some profit. It's always good to lock away some profit, but there's not necessarily a reason to fully exit shorts right now, in my opinion. Let me have a look what else there is. Wait, so that was Dixie. Yeah, Dixie's moving up. What's happening on the NASDAQ? We looked at S&P the other day. NASDAQ's moving down nicely. It's now retesting the 200 EMA. So yeah, we kind of, if you're wanting NASDAQ to continue down, then you probably don't want it to get back above the 200 EMA. But again, Dixie breaks that zone, it probably won't. So good key area to keep an eye out on. And let's have a look at S&P. S&P's changed structure, which is a bit of a worry, but hasn't come higher than this yet. But yeah, that's kind of odd, isn't it? That S&P has changed structure, but the other things haven't. And it's holding the 200 EMA, it's holding the 50 EMA. This was the telltale sign here when it didn't create a lower low, but we talked about that on, I think, yesterday's video. So anyway, the main thing is keep an eye on Dixie for now. If it breaks that vector, then yeah, that's your reason to hold on to your shorts. Looks like, yeah, it looks like it's doing it now. All right, guys, I am going to leave it there. Let me just check this. I hope you enjoyed that video. If you did, smash that like button, hit subscribe. If you're looking for somewhere to trade, check out the links in the description of this video. Check out the Traders Toolkit to come and learn this method with us in full, thriving community, everyone trading the same thing together. It is awesome. And if you're looking for somewhere to trade on, check out the links below for Bitget, with gives you a 15% ongoing discount off your trading fees. And Bitget can be used worldwide, no matter where you live, with a VPN. Just don't connect a phone number. Okay, bye. Have a good day. Bye-bye.